Something just happened in Bitcoin and almost no one's talking about it.
Welcome to the greatest show on Wall Street. I think that Wall Street's full undivided attention now is on Bitcoin. Like, this is no longer a contrarian trade. This is a consensus trade now. And so you have the ETFs, you have the Bitcoin treasury companies, you have retail, you have sovereign wealth fund. Everybody wants Bitcoin.
And no, it's not the halving, it's not the ETF headlines, it's not its new all-time high, and it's not some other cycle. Bitcoin has finally become what it's always claimed to be. For the first time in history, Bitcoin is moving truly like an uncorrelated asset.
So if you said, yes, we should have a 1% Bitcoin sleeve because it's not stocks, but it has the potential for returns, that's actually what you really want to see. You want to see it go up while your other holdings go down, and then you could say, look, I have a non-correlated asset.
And if you understood what that means, it means it changes everything about how to value it. But before we get into the macro shift and what's happening with Bitcoin and how big this can be, first let's talk about what the charts are showing right now, because most investors are focused on headlines, meanwhile completely neglecting Bitcoin's price action and how it might just be painting a much clearer story. What we are seeing could be a textbook example of the Elliott Wave Theory, a framework that's been remarkably accurate for forecasting Bitcoin's moves. Before I get into that, what is the Elliott Wave Theory if you haven't heard? It's a theoretical model that suggests markets move in repeating psychological cycles. These cycles can unfold in 5 ways up during a bull trend, followed by a 3-wave correction in a corrective phase, or better yet, a bear market. Waves 1 through 5 are impulsive moves to the upside, which are strong movements upward, of course. And then waves 2 and 4 are correctives, which are the dips in between. And then the ABC is the correction that happens after the whole wave has happened. So you have 1, 2, 3, 4, 5, and then A, B, C. This is the final wave before Bitcoin's multi-month correction, and that's if the theory holds. And I know a lot of people love looking at the charts, so let me just show you what I'm seeing. So here is Bitcoin's chart on a monthly time frame, and I'm just going to mark out the Elliott Wave Theory so you could see exactly how this is playing out, and then I'm going to move into the biggest news that no one's talking about on Bitcoin and why it's so important. If I just pull up these tools over here and move on over to the Elliott Wave Impulse Theory, I will drop my first anchor, in which was the start of this bull run back in December 1st of 2022. I would just drop my anchor and do the first move to wave 1. And then wave 2 is a corrective move, which happened in August 1st of 2024. I drop the anchor there, that's wave 2. Then we had a push to wave 3, which happened on the 1st of January of 2025. And then right after we had the corrective move, which is wave 4, which happened April 1st of 2025, if I drop the anchor there. And then we have wave 5, which is essentially happening at the moment. Now, there's no telling where it could go. I think Bitcoin's going to go a bit higher, up into the $150,000 range. So let's just drop the anchor there. I think that this move could take place up until the first quarter of 2026. And that is essentially the Elliott Wave Theory. If I go ahead and draw the corrective waves now, which is the ABC correction, which always happens after there's a big bull run, which we're experiencing at the moment. And mind you, I am putting these Elliott Wave theories in a estimated range of when I think this is going to happen. So I have this inkling that in 2026, we're going to have a major correction in the price of Bitcoin, which would make complete sense to this Elliott Wave Theory. If I was to just drop it on the theoretical high of, let's say, 145,000, we would have our first wave down, which would be the A move, followed by a corrective move, which is the B, and then C would be following right after, which is typically the deepest correction of the ABC moves, which would look something like this. If we go back to when I first started this, you have 1, 2, 3, 4, 5 to the upside, completing this bull cycle, and then you have an ABC correction, which could potentially bring Bitcoin back down into the $50,000 or $80,000 range. I know that's a big range, but we don't know where the top is, so it's very hard for me to predict at the moment. And if you don't believe how accurate this can be, let's just draw it again on previous price data of when this also occurred. So let's draw it back in the bull cycle of 2019. If I was to drop the anchor there, that would be wave 1, followed by the corrective wave 2, then you had wave 3, followed by wave 4, which is a corrective move, and then you had wave 5, which brought us to the new high of Bitcoin, which back then was around 68,000, 69,000, and that was in November of 2021. And then we were followed by a corrective move, and that corrective move was the ABC. So if I was to drop the A anchor at the high of where Bitcoin had its wave 5, you would have the corrective move A followed by the B and then followed by the C, which brought us to the bottom right before we started to enter into this current bull cycle. As you can see, it's been extremely accurate in predicting how much movement is left in Bitcoin, not necessarily to the price dollar, but it lets you know we could experience another leg to the high or a corrective move to the low. Now, enough of the price action. Let's actually go back to the biggest point of this video, which I have yet to tell you, and it might just change how you think of Bitcoin forever. For decades, Bitcoin has been tied to the stock market, and not just stocks. It's been extremely correlated to the NASDAQ, the S&P 500, and when equities would drop, Bitcoin would collapse even harder. When the S&P pumped, Bitcoin would also follow. It didn't behave like a hedge. It behaved like a levered bet on risk assets. But something changed in 2025. The stock market dropped again, and this time due to escalating tariffs and the global tensions. Tech got crushed, the S&P retraced, and Bitcoin, well, it actually held strong. And then it went up, not with stocks, but with gold. And that's not just a blip, that's a paradigm shift. If you've been in this space long enough, remember when Bitcoin was always marketed as the uncorrelated asset? That was part of the original pitch. Digital gold, store value, insurance against fiat collapse, it's a hedge against the stock market. But here's the uncomfortable truth. For most of its existence, Bitcoin has done exactly what the stock market has done and did not live up to that narrative. It collapsed in March 2020 when everything else did. It retraced with the S&P in 2022. It followed risk on cycles like clockwork. The narrative was sound, but the behavior didn't match until now. For the first time, Bitcoin is acting like what it's claimed over the last decade, a non-correlated macro-resilient store of value. That's the inversion, and most people don't see it. But let's talk about the evidence and some real data backing that. BlackRock's internal data shows that since 2020, Bitcoin has outperformed gold and equities in the 30 days following major geopolitical shocks. Only once during the 2023 banking panic did gold edge it out. Every other time, Bitcoin led. Meanwhile, M2 money supply is rising again globally, and every time liquidity surges, Bitcoin lags behind, then explodes upwards. This is macro behavior, not only meme coin hype. And just as important, the regulatory gates are now open. In 2025, the Federal Reserve removed key restrictions that held block banks from offering crypto services. That means banks can now custody Bitcoin same way gold is custodied by US Treasuries. That's not a newsflash, that's infrastructure, and institutional players are building on it. Strike's CEO just launched Bitcoin's native company with Treasury holding tens of thousands of Bitcoin. This isn't about speculation anymore, this is about balance sheets and long-term reserves. Let me give you some real-world analogies. Think of what's happening like this. Imagine if gold, after decades of obscurity, suddenly started trading like the US bonds during wartime. That's how serious this is. Bitcoin is shifting from a risk-on tech narrative to a risk-off monetary hedge, and that changed from being priced like growth equity to being valued like global collateral. This flips the entire demand curve. It's no longer just for speculators, it's now for allocators. This is the same dynamic Warren Buffett spotted with Apple. Everyone saw a hardware company. He saw a cash printing machine disguised as a phone. He bought the perception lag and rode it to billions. Bitcoin is sitting in the exact same window, still priced like tech, but behaving like money. The reason this moment is so important is because it finally resolves the tension between Bitcoin's identity and its behavior. Since day one, Bitcoin's been the branded hedge against the system, but every time the system shook, Bitcoin fell even harder than the rest. People used to mock it.
How could it be safe? It crashes when everything crashes during a crisis, blah, 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 blah.
And they were right. Bitcoin had the right thesis, but the wrong proof. But now, for the first time ever, the narrative and the behavior has aligned. This isn't about hype cycles. This is about Bitcoin maturing into its original purpose. It's like watching a kid who's been misunderstood their entire life suddenly step into the role they were born to play. Bitcoin was never meant to be just another risk asset. It was meant to be sovereign digital money, untied to Wall Street, politics, or central control. And now it's finally acting like it. This is the moment Bitcoin becomes real, not just theory, but in function. So let's zoom out. Bitcoin just broke the correlation with the S&P 500. It's no longer moving with tech. It's trading with gold. Its liquidity is rising, regulations loosening, and institutions are quietly buying it in bulk. This is the first time in history that Bitcoin is actually becoming what it always said it was, not a trade, a hedge, a reserve, a macro asset. And yet most investors haven't even updated their view. That's the opportunity. The narrative is lagging the behavior. And where narrative lags, arbitrage exists. Something just happened to Bitcoin and no one is talking about it, but you are, right now. And what do you do with this information? This might just be the edge that separates you from everyone else that just funneled in at these new highs. Because a conviction in an asset that you hold is ultimately going to be the determining factor if you actually profit off of that asset. And the reason is, if you lack conviction, then you're shaken out at any bad news. But when you increase your conviction, you hold through whatever new headlines come out to shake you out of your positions. And if you know that Bitcoin is now decoupling from the stock market and traditional assets, which its first narrative really was, then you know that this is a much bigger play at hand, and this could potentially be the saving factor of when traditional markets really do run out of steam and start to spill over. Where do people go? Well, if Bitcoin is showing the evidence of starting to be uncorrelated, then potentially this might be the place where people funnel. Subscribe to this channel to stay up to date when there's new breaking financial news that could potentially change how you structure your portfolio moving forward into the future. And like always, thanks for watching.